Hello there. Welcome to Trading Day. Let's get to the big stories we're bringing you from our newsroom. The Prime Minister, Mr. Carney, says Ottawa will launch what the Liberals are calling the Canada Groceries and Essentials benefit starting this year. GST credit payments to eligible households and individuals will increase by 25% over the next 5 years. Ottawa will also provide a one-time special payment in June, equivalent to 50% of the credit. The move is billed as an effort to tackle affordability concerns and make up for higher food prices since the pandemic. Shares in Allied Gold trading at a record high after China's Zijin Gold agreed to buy the Toronto-listed miner for $5.5 billion. 3 African assets and development projects will be added to Zijin's portfolio. We spoke to Allied CEO, who says the deal is part of a broader process that will ultimately benefit shareholders.
I think the shareholders should be comforted that they're getting a very fair deal. And one more thing that I think is important here, which is that we're in a business of creating options and optionality. So in that context, and risk mitigation is part of that. In that context, I don't know where gold price will go. I'd love to believe what you've mentioned, that gold price continues to go higher, but equally it could go lower. And if it goes lower, shareholders have the certainty that they've got an underpinning in their share price with a cash deal of $44 per share.
And there's a look at CoreWeave, the provider of data center or computing capacity. That stock jumping 8% today. Chip giant NVIDIA is investing an additional $2 billion US in CoreWeave in an effort to help speed up more than 5 gigawatts of extra AI computing capacity by the end of the decade. CoreWeave will be among the first to deploy new NVIDIA products, including storage systems and a new central processing unit. And there's a look at the TSX hitting record highs once again amid this rally in gold stocks as gold hits record highs. And let's have a look at the U.S. markets. They too are pushing higher. And let's check out a few of today's trending trades. Another look at the golds, in particular the TSX Gold Index, and that one is hitting a record high. Look at just the vertical ascent with gold today touching. It's for the first time hitting above $5,100, although later in the morning it eased a little from that level. But gold did hit a new record high north of $5,100 US an ounce. One stock that's in favor with investors right now, McEwen, that's the mining company, and that stock jumping 6%. Lots of gold stocks are jumping, but of course they also have a copper iron in the fire. They have a copper play in Argentina that a lot of investors are watching. And we've seen some strength in Apple. JP Morgan sticking with its buy rating on this tech company and raising the price target to $315 from $305. We are expecting on Thursday Apple's fiscal first quarter earnings. The stock has been something of a laggard over the past year compared with the broad market, and JP Morgan arguing that recent underperformance has opened up an attractive entry point. A couple of laggards. Telesat Canada, the provider of satellite services, is down today. Last week, we heard that creditors were suing it, alleging that the company transferred a key asset beyond their reach. They want that unwound. This company, of course, is set to become a defense contractor for Ottawa. Apparently, according to these creditors, the company said, don't worry about this asset switch. They moved, they own Telesat Canada, but they moved a 62% stake in a low Earth orbit satellite business known as Lightspeed. And the lenders say that was done to get it beyond their reach. And let's have a quick look at TJX. Now, I haven't seen any bad news on TJX, but TJX on New York, but perhaps just the run-up in the stock is giving some investors pause, down about 3% today. But Morningstar, for example, saying that off-price dominance endures for TJX because it's got this massive scale that lets it buy off-brand or off-price clothes. People getting rid of inventory, people who've gone bust. You can get a wide variety of some quite upmarket clothes at the TGX stores, which include winners here in Canada. Gold hitting new record highs today. Investors concerned about geopolitical uncertainty. They also expect, or many of them expect, central banks to go on increasing the gold weighting in their reserves. We are joined by Uma Moriarty, Senior Investment Strategist at Center Square Investment Management. Uma, thanks for joining us.
Thanks for having me.
I think it's fair to say very few people saw this meteoric rise for gold over the past year.
Absolutely. I mean, you showed the chart earlier, right? It seems like it's been a parabolic move in gold, and there are a lot of different things that are driving this. You mentioned geopolitical uncertainties. I mean, there are, gold has been used as an inflation hedge. There are some upside risks for inflation here as well. Especially, you mentioned a little bit, CoreWeave, the kind of capital being deployed across the AI and infrastructure build out here is massive. And so you're seeing some inflationary pressures from that end. And so gold is being used as a hedge against inflation. It's being used as a hedge against a lot of this potential uncertainty associated with AI. There is a lot of conversation around whether we're in some sort of a bubble. So inflation hedge, a hedge against AI. And as you mentioned, that there is a lot of buildup in gold across central banks as there's a little bit of a pullback in reserves of the US dollar, frankly.
Is that partly people are concerned about policy unpredictability in Washington? That's why some investors and central banks are lightening up on the greenback?
This has been happening for a while, right? This has been happening for several years as you've seen kind of the holdings of US Treasuries across these major central banks really pull down. And it's happening just as you are seeing a lot more transactions in commodities and other markets happening that are not denominated in the US dollar. And so you've seen this de-dollarization trend happening for several years now, and I think it's just continuing.
What strategy are you recommending to your clients when it comes to gold? Buy equities, buy bullion?
Here at Center Square, we're really focused in the real estate market, and that's another great hedge for inflation, right? So as we see a lot of these various different risks going on in the market, there are a lot of places within the real estate industry where we see a lot of safety for investors, especially if you think about the equity markets. We look at global REITs here, and compared to the broader equity market, trading at very discounted multiples that you've really only seen once or twice in the last 20, 30 years. And so presents a great valuation proposition for investors as they're looking to diversify their equity portfolios, real estate presenting a great opportunity. There are some really interesting plays here where we're seeing demographic tailwinds, for example, driving fundamentals for real estate in ways that we've never really seen before. For example, in the senior housing space, where you're seeing this aging demographic coming into this needs-based senior housing property type. And it's coupled with the same time as you're seeing very limited supply of this product. And so you're seeing really strong fundamentals on the ground. And a lot of the REITs that are focused in the senior housing space are also able to really deploy a competitive cost of capital to also accretively grow their portfolios. So you have this really compelling opportunity from both the internal and external growth perspectives for senior housing REITs here right now across the US as well as in Europe.
The broad market, what's your view? Is there still too much euphoria about tech stocks?
We've seen this concentration within the marketplace really associated with AI, associated with tech. We are seeing a little bit more broadening across the marketplace. And I do think as we see this broadening occurring, we're going to see some of these areas in the market that have not really seen that same love as it relates to what's happening from the perspective of multiples really come into play. So I think the market is broadening here a little bit more, and you're going to see some other parts of the market start to participate a little bit more as we start to see this market breadth.
Leave us with a final thought. What are you looking to from the Fed? There's a general consensus that we aren't going to get any cuts for a while. You guys, I believe, think there won't be a cut till the summer anyway.
It's difficult to see a reason for the Fed to cut here. The data that we've been getting from the economic perspective seems to be kind of muddling along, right? As long as they're still focused on what's happening from the inflation perspective, what's happening in the labor market, those data points that they've been seeing seem fairly fine. So until there is something material that changes from the economic perspective, and the data doesn't really indicate that to be the case, it's difficult to see a reason why the Fed would really move interest rates today. We'll see what happens when we have a new Fed chair coming here at the beginning of the summer. But until then, it does seem like there is no data to indicate that the Fed would need to move policy rates.
Uma, thank you very much indeed. Uma Moriarty,
Thanks for having me.
Senior Investment Strategist at Center Square Investment Management. Coming up, our own Lindsay Biscaya has been watching that Allied Gold takeover, and she'll bring us the latest after the break. Yet another gold mining company being taken over, listed on the TSX. Allied Gold, in this case, is being bought by a Chinese-based mining company for about $5.5 billion. Lindsay Biscaya joins us with more. Lindsay.
Hi, Andy. Yeah, this is an interesting deal or acquisition that we're talking about here, because Allied Gold, compared to some other Canadian gold mining companies, really isn't that big of a company. And then compared to Zijin Gold International, which is one of the largest in the world, it is quite a small company in terms of how much gold it produces a year. Last year, Allied Gold produced about 375,000 ounces of gold. They plan to up that over the next couple of years, but quite a small company. Now, when we're talking about Zijin Gold International, this is actually indirectly owned by the Chinese government, this company. It's actually a spinoff of a company directly aimed at growing its premier overseas gold assets over time. So you can see where this acquisition really is coming from. In terms of this deal, the chairman and CEO of Allied has said it provides a highly attractive all-cash offer for the company, which is $44 Canadian per share. That's a 27% premium over a 30-day average. And completion of this deal expected to happen in April. Still requires some votes, still requires some approval. But some analysts we're hearing from today say the deal itself is maybe good for the team or the people involved in it. Take a listen.
Allied's properties are all in Africa and in some jurisdictions that are not exactly the most mining friendly. And so I think this is just a management team. I mean, this is a former management team that ran Yamana Gold for many years. Just looking at the market and the tea leaves and saying, I'm sure it just IPO'd a couple of years ago, but I'm sure the team that put it together is doing quite well for themselves with this deal. And I think this is just them maybe looking for a good time to exit, and maybe even looking for potentially, and this is my own speculation, another opportunity to continue to ride this gold wave by starting another venture.
So as I mentioned, this deal could close in April, Andy, but you still need 2/3 of shareholders majority voting in favor of this deal. There's some thinking maybe that might not be as easy as some other acquisitions that we've seen. The company, though, Allied Gold, saying they're confident this deal will go through. And then, of course, as what happens with any acquisition with a foreign company, you need regulatory approval from both the Canadian government and the Chinese government. I have reached out to the Innovation, Science and Economic Development Canada Department, which would approve this deal. Still waiting for comment whether they are planning to approve it. But we know Ottawa has cracked down before on Chinese ownership in the Canadian critical mineral sector. And we'll have to wait and see whether that actually ends up happening again, because, of course, the government obviously doesn't consider gold to be a critical mineral.
Thanks very much, Lindsay. Really appreciate it. Lindsay Biscaya. Up next, we heard from the CEO of Allied Gold, and we're going to bring you that conversation. Gold climbs to record after record. We've been seeing mergers and acquisitions in the sector. The latest deal, Toronto-based Allied Gold has agreed to be acquired by the Chinese miner Zijin Gold for $5.5 billion in cash. We got more on this when we were joined by Peter Moroney, Chairman and CEO of Allied Gold. Let's have a listen.
This is part of a broader process. We looked at the landscape from the point of view of what assets are there to purchase that would be synergistic. What can we afford to pay given our balance sheet? What's in front of us in terms of the obligations vis-a-vis that balance sheet? Are there business combinations that we could pursue? In the end, we also looked at it from the point of view of if there's a buyer, who is a logical buyer or logical buyers, and what should they be paying? I don't believe that anyone would price something on the basis of the gold price today or on the basis of where the gold price should be expected to go. Normally, as you're aware of the market, people are pricing things based on some discount to gold price. So if I look at it from that point of view, with a discount to gold price that is above where gold price is in analyst models and in market more generally, we're getting very fair value for our shares. And adding to that is we are at an all-time high. We are at the high for the year in the last 12 months, and we're being paid a premium on top of that high, and a premium that is close to 30% to the 30-day volume-weighted average price of the stock. I think the shareholders should be comforted that they're getting a very fair deal. And one more thing that I think is important here, which is that we're in a business of creating options and optionality. So in that context, and risk mitigation is part of that. In that context, I don't know where gold price will go. I'd love to believe what you've mentioned, that gold price continues to go higher, but equally it could go lower. And if it goes lower, shareholders have the certainty that they've got an underpinning in our share price with a cash deal of $44 per share.
Now, we've heard from some shareholders that feel that this could have been done differently, maybe re-rate on its own, and they're not excited with this deal. Are any worries about the vote that's coming up?
Well, every shareholder that is invested in our stock bought shares at a price that is lower than this, and every deal that we've done is at a deep discount to where this price is at. If I looked at it from the perspective of most of our larger shareholders, and certainly the shareholders that participated in the preceding financings that gave our balance sheet the robustness to build out our growth and get that re-rating, they would be making a multiple of their investment, certainly a premium to their investment, if not a multiple. So from that point of view, I'm not concerned about the carry on that vote at all. I would say to those investors that are saying, well, a re-rate is coming, so why not wait? I would say to them, why didn't you invest earlier? Don't wait for the re-rate, and you would have made a bundle of money in the deal that we're proposing.
Has anybody from outside the company looked at the deal and reviewed it?
Yeah, so we had a financial advisor. We formed a special committee. That's very typical, but I think it's important for governance. And that special committee had its own advisor that provided a fairness opinion, as we disclosed this morning. And so there is a fairness opinion. And fundamentally, the value is there at this price. The company is fairly valued. Can we argue that there's a range? The answer is yes, but we're well within that range. And we also have to look at it from the point of view, as I said a few moments ago, Roger, of what's the gold price that you assume. And if we look at the analyst models, what's on in market, how people are investing in our stocks, they're not taking into account $5,000 gold. They're not taking into account $4,000 gold long term. It's closer to $3,000. And I would argue that in what we're being offered in cash, all cash, is well above what is in those models and the use of gold price.
Now, this comes just after, not long after the announcement of deals and potential deals between China and Canada, but also we're in the middle of the trade war with the U.S. Any worries about the optics of this and then the fact that another company is coming off the TSX?
Well, let me deal with the first point first. I don't know that we've got the competency to deal with the geopolitical aspects. This is a company that has acquired assets before. It's a company that has acquired Canadian assets. Gold, as much as I admire the metal, is not considered a strategic metal. So I'm not concerned on the geopolitics. And on the TSX side, in the same way as when we sold Yamana in 2023, we formed Allied and listed it on the Toronto Stock Exchange. I will express a wish, which is that let's work on completing this deal. But once this deal is completed, are there other deals that can be done with this fit-for-purpose management that has done it with Yamana, has done it with Allied Gold, and are there other opportunities?
What's next then? What can you allude to what you might be looking at next?
At this point, I'm focused on going to our shareholders, communicating the message about what this deal is about and why our board saw fit to accept this deal and getting the deal completed. Let's come back to this in a few months and see if there's something else.
Okay, and if the deal by chance doesn't go through, what would be Plan B for you?
We continue with that robust growth that we have, as you described. What was it compelling to the multiple parties that looked at us and this winning bid? What was compelling to this bidder and others is that we are a mid-tier company that is underpinned by 2 Tier 1 assets. They're paying a robust price to get that, a fair price, however, to get that. So in that context, my view is that we continue with business as usual, and we looked at the other strategic opportunities to create value for shareholders that were always being contemplated and weighed one against the other by our board of directors.
Peter Maroney, the CEO of Allied Gold. Coming up, Team Canada opened the TSX this morning, putting forward a new plan to boost investment in Canada's sports system, because we've heard about a devastating funding shortfall for Canadian athletes. We'll have more when we come back. Welcome back. Mr. Carney, the Prime Minister, says starting this year, GST credit payments will increase by 25% over the next 5 years. And Ottawa will provide a special one-time payment equivalent to 50% of the GST credit. The Prime Minister says the move is in an effort to tackle affordability concerns.
We're working to address the root causes of inflation and working on longer-term solutions to bring down the cost of groceries in Canada. That starts by improving the resilience of our supply chains. Because when issues arise in supply chains, from transportation to process to distribution, costs rise at every step along the way, and these costs end up on the grocery bills. These payments make up for the higher level of food prices since the pandemic.
China says that trade truce with Canada acknowledges a new type of strategic partnership and is not aimed at the United States. This comes after Washington threatened 100% tariffs on Canadian goods if this country reaches a trade deal with China. This latest agreement, really a partial trade deal, would ease Canadian or Chinese tariffs on Canadian canola and other agricultural exports and allow visa-free travel for Canadians. Ottawa is seeking to diversify trade amid these tensions on trade between Canada and the US. We're watching shares in Skywater Technology and IonQ today. IonQ is buying the US chip maker in a cash and stock deal valued at about $1.8 billion US. Under the terms, IonQ will pay $35 a share and will get access to domestic chip manufacturing tied to defense and national security. Team Canada opened the Toronto Stock Exchange this morning, where they launched a new plan for boosting investment in Canadian sport over the next decade. The Team Canada 2035 plan will, they hope, represent $500 million of private investment that aims to make Canada a top 5 country by medal count in the Olympics and get 1 million more young people into organised sport. We are joined by Jacqueline Ryan, CEO of the Canadian Olympic Foundation. Great to see you, and thanks.
Thanks for having me here today, Andy.
And we're talking about both Winter and Summer Olympics.
We are indeed.
And the Winter Olympics opening in just 11 days.
They are on February 6th. Looking forward to it.
We do hear, for years now, it seems we've heard about Canadian athletes going into debt, struggling, some warning, I'm going to have to quit the sport. Let's get the gloomy stuff out of the way. But the federal government apparently hasn't increased core funding for Olympics athletes in 20 years. So it hasn't been easy.
It hasn't been easy for these athletes, yet they continue to perform exceptionally well on the world stage. We're really proud of Team Canada and looking forward to Milano Cortina Games, which start in 11 days. Really, the athletes are poised to do exceptionally well. Today's announcement was really about the Canadian Olympic Committee's private investment of $500 million over the next 10 years for our new strategic vision entitled Team Canada 2035. So this investment is all about the private investment that comes from our marketing partners, our donors, and working in collaboration with the national sport organizations across the country.
So it would be about $50 million a year?
It would be approximately that, yes.
Mostly from sponsorships?
Yes, largely from sponsorships. So the Canadian Olympic Committee is, in fact, and people are often surprised to hear this, we're a not-for-profit organization, and we're almost entirely funded by private investment, which comes from our marketing partners, so our sponsors, and our donors. And so it's a fortunate position to be in. It's fortunate because our marketing partners and donors are on this journey with us. They're very interested in really making a difference for Team Canada.
How much of the funding for Canada's Olympic effort would come from Ottawa, and how much would come from the Olympic Foundation?
So there is a distinction. The Canadian Olympic Committee is a not-for-profit, and the Canadian Olympic Foundation is the charity that supports the Canadian Olympic Committee. I, in fact, work for both, so that is a tad confusing. But our investment, again, is private, and then we work together with national sport organizations who, on their own, they drive some revenue on their own through marketing partnerships, some through the federal government, some through other sources, but they are the organizations that have not seen a funding increase in 20 years. And there is a big gap there to solve.
And that's in nominal terms, let alone inflation-adjusted terms.
Absolutely. Yeah.
It's interesting. Not a priority for Ottawa, it seems.
Well, we don't know. We're collaborating certainly with the Prime Minister and the Secretary of State for Sport, Adam Van Koeverden, who is a gold Olympic medalist, and the Prime Minister, who's very passionate about sport. And we believe that there is no better nation-building project than Team Canada. And Team Canada 2035 is really positioned to make very focused and efficient investments in sport in Canada to really drive a big difference for Team Canada athletes.
When it comes to the amount of money that you raise and spend, does the vast majority go to the Summer Olympics or the Winter Olympics?
So again, as a not-for-profit, the resources come in largely through marketing partners and donors, and then the majority of those resources go right back into the sports system to fund all of the national sport organizations in this country. So summer, winter together. And that is our mandate, both Summer and Winter Olympics. And you talked early on in this about the new strategic vision we have, which is really anchored in 3 pillars. One is podium, one is play, and one is planet. So from a podium perspective, that's very much our commitment to invest our resources in a very ambitious goal to be top 5 in the world on the Olympic medal tally. And that's top 5 combined, summer and winter. So we will need to do well in both to drive that result. We're committed to doing it. We're doing well. Absolutely, Team Canada over the past couple of years has done exceptionally well. 27 medals in Paris, which is just great. But we're looking up the medal tally at Australia and France and Norway, and we know we can do better. And so we're setting that big ambition. Part of that ambition, though, does require an investment in young people, investment in young people to get out and play sports. And so we're collaborating with national sport organizations to have 1 million more kids out playing sport. And that's
in organized sport.
In organized sport.
Right.
That's a really important point. That's really driving the broader sport ecosystem, which provincial organizations, national sport organizations, all of which are on the high performance journey. So not only is sport just great for kids to get out and play, but it also will support the high performance journey and really ensure that Team Canada represents Canada.
Under former Prime Minister Stephen Harper, we had that own the podium thing, and there was great talk of aggressive financial backing for Canadian Olympians. Did that kind of fizzle out?
Oh, absolutely. We still work with On the Podium. They're a wonderful organization. They're the ones that really help us figure out how best to focus these resources so they drive the most efficient return. So they're an important part of this broader sport ecosystem. So On the Podium has had years of success, but you're absolutely right. It was early before 2010 that the On the Podium began, and we continue to collaborate with them to make sure that these resources are being used efficiently.
I mean, anything that gets kids off their phones and out into the open air sounds good.
It absolutely is, and that's our goal. That's our goal, is to really get the kids out there playing, and we call it sort of widening the aperture. So bring in communities who wouldn't otherwise have access to sport in Canada, and make sure that they have an opportunity to try their hand at various different sports on the way to the high performance journey. And we have a number of marketing partners who help us with those initiatives. Bell Canada has a program called Bell Starting Line, and it's all about that. It's focusing on newcomers to Canada so that they can try sports that they've never tried before. We had them out speed skating a couple of months ago, and working together with the provincial organizations and community groups so that they not only try the sport, but then continue on.
Thanks very much, Jacqueline.
Thank you.
We'll have to leave it there. That's Jacqueline Ryan, CEO of the Canadian Olympic Foundation. Up next, the Prime Minister unveiling a new package of measures aimed at bringing down the cost of living. But will these measures actually move the needle? We'll have more after the break. Earlier today on Hot Picks, we heard from David Nierengarten, senior analyst at Wedbush. The topic, the biotech market. We kicked things off with one of his selections, Spire Therapeutics. The company is working on treatments for autoimmune diseases. So let's check it out.
By multiple genes and multiple environmental factors. One of the common autoimmune diseases is multiple sclerosis. Spire is working on several others, including ulcerative colitis, Crohn's disease, and rheumatoid arthritis and other related rheumatoid diseases. So there are, psoriatic arthritis is an example of that also.
And they have some possible catalysts coming up, 3 data events in Q2. Can you tell us about one or two of those?
That's right. So they have 6 for 26, as we're calling it. They have 3 actual data releases for their monotherapy studies, phase 2 in ulcerative colitis, 3 different drug candidates, but they're targeting known targets in ulcerative colitis. So we think it's a high possibility of success for those studies. Importantly, those studies should show that the drugs can be dosed once every 3 to 6 months, making it a lot more convenient than the current therapies out there for patients with this disease. And in the second half of the year, we'll see additional data for those other rheumatology diseases, such as rheumatoid arthritis and psoriatic arthritis that I mentioned earlier.
Apparently, this whole autoimmune area is being shaken up by this microchimerism, whereby the body has cells from other people in it, and maybe they're part of the problem. I know it's very early days.
That is a theory that's been posited as a cause for autoimmune diseases for quite some time, particularly in women. When they're pregnant, women, do have cells from a new person, of course, in utero, and there tends to be in a lot of autoimmune diseases higher rates of those diseases in women, particularly women of childbearing and post-childbearing age, early, post-childbearing age. So in their mid-30s to mid-50s is a frequent increase in incidence for those diseases, again, in those women.
You have another idea for us. Disc Medicine, the symbol is iron on the NASDAQ. What are they working on?
So they're working on rare diseases of the blood system. So they have a product candidate that's in review right now with the FDA, bitopertin, for a rare disease called EPP. It causes a buildup of a metabolite that reacts with the sun to cause pain, actually a significant pain in patients in their skin, and can cause liver problems also. That's under review right now. And then they have a couple other drug candidates for either iron deficiency causing anemia or iron overload causing too high levels of iron in the blood and in other rare diseases and related diseases of myelofibrosis and other disorders of the blood system.
And then finally, Kiniksa Pharma, it's working on recurrent pericarditis, pericarditis. I'm very sorry. What is that ailment, please?
It's a very painful inflammation of the heart. So a patient will have an inflammation of this. There's a pericardium. It's a sac surrounding the heart. And that inflammation, as you can imagine, can cause severe pain. Patient might feel like they're having a heart attack, frequent trips to the emergency room with severe pain. And Kiniksa has a drug called Arcalyst that treats it very well. It reduces recurrences by 90+%. Patients are on the drug for quite some time typically, and that's really driven sales here. We estimate 900 million plus in sales in 26. And the company is a rare mid-cap or small-cap biotech that's profitable. They will have a positive EPS, and what is really going to trigger upside, in my opinion, for the shares will be their less frequently dosed, wholly owned asset, where we'll see some data for that in the second half of the year. That could literally double their profits if it were successful and approved eventually.
Because right now, I think you mentioned they're in a partnership with Regeneron, which stands to get some of the earnings from that drug you mentioned.
Correct. Regeneron gets approximately half of the profits. There's some adjustments for expenses here and there, but it's roughly half of the profits. And so obviously they have a wholly owned replacement, hopefully with positive data in the second half of the year that could lead to a drug approved with literally double the profit margin.
And there could be then acquisition in the cards if that all works out?
I would expect that. This is a very, again, it's a profitable franchise. It's well contained, meaning, you have a relatively limited sales force that can, go out there, sell the drug, limited, additional infrastructure required. It would be a great bolt-on acquisition for a mid or larger size pharma.
I've got to ask you, when you look at DNA and the evolution, do you find yourself learning new things all the time? It's pretty amazing.
There are a lot of new things out there. The most exciting thing for me is really when we do see some of these new mechanisms get developed. I've been doing this long enough where I've seen some, targets that were, mere ideas, 10 years ago, and now they're, getting into the late stages of approval or are already approved drugs, and it's really gratifying to see that.
That's pretty amazing. Whenever I read something, it looks like they're finding DNA is more complex in its mechanisms than they thought before.
There's a lot of complexities, autoimmune in particular. Some of the mechanisms for causing those diseases that we just talked about are very complex. I don't think there's a single target, for example, for ulcerative colitis that will be the cure-all for everyone. I think we're going to need combination studies and combination therapies for that. But it's there's a lot of complexities in those diseases. Maybe we will find a single target that really leads to a much better drug candidate and approval.
Trading Day. We'll be right back. Prime Minister announcing a boost to GST rebates for low and modest income Canadians, partially to help offset the rising cost of food, especially since the pandemic. There's also money for food banks and for Canadian food companies as well. Let's take a broad look at the effectiveness of these measures. We're joined by Catherine Festorica, the founder of Edie Farming. She has multiple roles, wears multiple hats in the food industry, but we're tight for time. Tell us what Edie Farming, you're working on the concept of greenhouses in urban settings, and tell us about Edie Farming first off.
Yeah, happy to. We're looking at bringing rooftop greenhouses into urban centers. So think of your Amazon distribution warehouses or even data centers. What are we doing with all these data centers that are going up? They have all this waste heat. Can we turn it into energy and use that to power greenhouses? Right in Etobicoke, right in Alberta, right in North York.
You're also involved with Mars, which is the giant Toronto entrepreneurs nursery. What are you doing there?
Yeah, Mars has just announced a new, its very first year of doing a new mission for Mars, food and ag tech. And so it's looking directly at sort of what Prime Minister Carney has talked about today. How are we bringing the future of food to Canada? How are we turning urban centers, a downtown Toronto center focused on ventures, Canadian ventures, and how are we helping them grow and scale? And I think very uniquely, why would a downtown Toronto space be at the center of food and food security and ag tech? And it's directly positioning sort of this concept of we can no longer rely on the United States for food. We need to bring that into our urban centers, and we need to create a resilient food supply chain. So that's sort of what we're working on at Mars.
And you're also on the board of North York Food Bank. So you don't have much time for sitting around watching Netflix. It sounds like me. It sounds to me.
I still have time to watch Heated Rivalry. Don't worry, don't worry.
Oh, yeah, you haven't missed that. So talk to Mr. Carney's measures today. I mean, there's an increase of a few $100s a year for families to help them with groceries. There's money for food companies and for food banks. But stepping back from it, will this make a big difference?
I think it depends. I think these are mechanisms that we've seen before. Obviously, the GST rebate, that's nothing new. Food banks have been receiving funding. But what I think is really interesting is that the Prime Minister is clearly following up from his speech in Davos, where he really positioned food and food sovereignty as crucial for national defense. And when we think through, okay, so there's all these sort of, there's new funding, there's new mechanisms, but what does that really mean? I think it's clear that we're thinking about food from a more holistic standpoint, and we're thinking, how do we really ensure that Canada won't see empty shelves if any geopolitical issues happen? If we're now in climate change, we're in a crazy snowstorm here in Ontario, how do we look at the future of food and build resilience into it? So will this necessarily make food more affordable when a Canadian goes to the grocer tomorrow, next week, next month? No, but long term, looking at the defense of Canada and Canada's food systems, I think there's potential.
But there's some things it'll be very hard to grow in competition with Mexico, for example, with their low wages.
Absolutely. And I think that we're seeing the role of technology coming in. Think of AI. At ED Farming, we have an AI sensor that's AI technology that's allowing for lower labor in greenhouses. So we're actually able to automate a lot of these processes to make Canada more competitive. And we know that Canada has some of the best talent, some of the best entrepreneurs, some of the best ideas. We really need to fund them, we need to scale them, and we need to help them get more commercialization and on shelves for Canadians to purchase Canadian goods.
Do you feel the big Canadian retail chains do enough to support Canadian growers and processors, food processors?
I mean, I think it depends regionally. I know I'm based in Toronto, I'm in Ontario, and there's a big push in grocery stores for a buy local and for Foodland Ontario and positioning food that's locally grown to be at the forefront of shelves. But it really depends on different regulations. I think that everybody is trying to figure out what can they do to make this work the best for Canadians. But a lot of work still needs to be done. In this announcement by the Prime Minister, there's this new national food security strategy team that they're putting together. I think it's going to be really interesting to see if we can have some of those discussions come out of it. Are retailers going to be at the table? Are ventures going to be at the table? Who's going to be sort of involved in that? And how can that impact Canadians every day?
I sometimes wonder about the Netherlands. I think they're the world's #2 food exporter with hardly any land. Why can't Canada pull that off with all our land?
Yeah, I think we can. I think we can. A big issue has been our energy costs. That's why I'm looking at data centers and the waste heat around data centers. But, Leamington is the greenhouse capital of Canada. That's where I'm from, born and raised. And we've really excelled on greenhouses. However, the majority of that food goes to the United States. It actually doesn't come to Canada. So I think we need to rethink, how are we using the land that we have, the buildings that we have? How can we maybe rethink our innovation around lighting, around energy, around sort of distribution channels? How can we bring food closer into the source? And I really think we just haven't had to. We're Canada. We're an amazing, prosperous country. We have a lot of land. We have a lot of natural resources. We haven't had to innovate potentially at the scale that the Netherlands has. And so now we're sort of in that crucial moment where the government is clearly stepping up with funding. Ventures are ready to be able to scale, and we're able to sort of make those first sort of changes, I think.
Catherine, thank you very much indeed. Are you ever a dynamo? Thank you very much indeed.
Flattery. Thank you so much. Appreciate it.
Catherine Festeriga, founder of ED Farming. Know Your Options is back. Tune in Wednesday. Remember, 3 p.m. Eastern. That's this week. The show comes up every 2 weeks. And we get all your options tradings answered by Chris Tom of Moat Financial. Send us an email to knowyouroptions@bnnbloomberg.ca. Thank you very much for watching Trading Day.